The BRICS meeting in Russia has now concluded, and as expected, there were some interesting developments that were brought forward in this meeting. As I've stated before, the Bretton Woods Agreement that's been in place since the 1940s, with the US dollar as the dominant world reserve currency, is slowly whittling away. Now, one of the things that triggered this was the US action in removing Russia from the SWIFT system. Basically, the US froze Russian assets and as a result took the Russians off the SWIFT trading system, which is basically the system that the whole globe uses. Now, having seen this, other nations that are afraid of falling on the wrong side of the US said, maybe we should help the Russians develop an alternate trading system so that we don't get frozen out from the trading because of US sanctions. So the BRICS have really moved quickly in developing an alternative trading system to the US dollar. Now, this is a very, very important development that I can't emphasize enough that's going to influence and affect investors globally. In short, the Bretton Woods Agreement allowed the US to have commodities globally priced in US dollars. And now this was a huge benefit because the US could print lots of money, run deficits, which they've done since the early 60s. And the excess money that they were printing and running these deficits could be absorbed globally, meaning countries outside of the US always needed US dollars to buy commodities. So they were happy to keep US dollars on reserve, but also buy US treasuries. Now, this is changing because countries have, as we've seen with the Ukraine war, don't want to have a lot of US dollar assets and treasuries if they run afoul of the US. So this meeting in Russia was very significant. One of the things that was proposed that Vladimir Putin has said they'd like to produce a BRICS precious metal exchange and commodity exchange so that commodities will trade in their nations under their control as opposed to the West. Right now, commodities have been largely priced in New York City and London, although the Shanghai has recently developed in the past 2 decades. But by pricing their own commodities, the BRICS nations feel they'll get a much better price for their commodities, and hence that will benefit their economy. So the BRICS developing a different trading system using 40% gold is a big event. And as I've mentioned, there's been very little coverage here in North America on this. So I did a write-up last week showing the history of the US dollar dominance and how it's changing. We've also produced a short bullet point highlighting the important points from my article. I encourage you to look at that, and if you have time to read my article again, because it's going to have a big impact on investment returns going forward. It's a long-term progression. But as it stands now, one of the reasons why gold and silver may have run up so much this year is the markets are preparing for what is developing in this BRICS settlement system. So what I think this means for investors, specifically in the US and Canada, is that over the next decade or two, we're going to see a rise in hard assets like gold and commodities, oil, etc., and a decline in financial assets, meaning stocks, real estate, and bonds, because with a different and alternative trading and currency system, it's going to be harder to create leverage in this world. And let's face it, leverage has been a massive driving factor behind the asset gains in stocks and real estate over the last 40 or 50 years. So please have a look at my article and the bullet points, as I think this is a very, very large issue and a big turning point in how the world does business going forward.